Welcome to DebtCircle Key Round Ups. Today we have a packed show covering credit ratings, municipal bonds, private credit, clean energy finance, and major regulatory developments shaping India's debt markets.
And I'm Leela. We begin with a strong signal from the renewable energy sector, where CleanMax Enviro Energy Solutions has been upgraded from CARE A+ positive to CARE AA- stable, reflecting stronger creditworthiness, improved investor confidence, and lower borrowing costs for its capital-heavy expansion plans.
Absolutely, Leela. CleanMax projects consolidated EBITDA of Rs 1,295 crores for fiscal year 2026, a 28% year-on-year increase, while profit after tax is expected to grow more than 4 times. Their operational capacity now stands at 3.1 gigawatts, with a contracted portfolio of 5.7 gigawatts.
And maintaining a balanced capital structure will be critical as the company scales. Lower financing costs are especially important in renewable energy, where access to affordable long-term debt directly impacts expansion and profitability.
Now to India's retail credit market, which has crossed Rs 170 lakh crores, with gold loans emerging as the fastest growing segment. Gold-backed loans surged 50% year-on-year to Rs 19 lakh crores, driven largely by a 36% rise in gold prices and changing borrower behavior.
That shift is significant because gold loans are no longer viewed only as emergency borrowing tools. Borrowers increasingly see them as efficient liquidity instruments, helping expand secured lending while delinquency rates continue to fall across retail portfolios.
Interestingly, loan portfolios are growing faster than the number of active accounts, suggesting higher ticket sizes and a greater preference for collateral-backed borrowing, while unsecured categories like auto and two-wheeler loans have moderated after the festive season.
Staying with ratings upgrades, Sammaan Capital received an ICRA AA+ stable rating on May 20, 2026, following similar upgrades by CRISIL and CARE earlier this month. The key driver was IHC's major investment on March 31, 2026, which strengthened the company's capital base and financial stability.
The upgrade should help Sammaan Capital access broader funding markets at more competitive interest rates, supporting faster loan growth and improving investor confidence. Although ICRA also noted the company's continued reliance on IHC's operational and financial support.
Richfield Financial Services raised Rs 14.60 crores through secured redeemable non-convertible debentures carrying coupon rates ranging from 0% to 12%, with maturities between roughly 1 year and 5 years through the private placement route.
Investors, however, must watch the pari passu secured structure carefully because these debentures share equal claims on movable assets with existing creditors. The company's ability to deploy funds efficiently and manage leverage will remain crucial across varying maturities and coupon obligations.
Let's turn to municipal bonds now, where nearly a dozen Indian cities, including 7 from Maharashtra, are preparing first-time issuances totaling around Rs 3,300 crores in 2026, with Navi Mumbai and Thane alone targeting Rs 1,000 crores each.
Regulatory reforms from the Securities and Exchange Board of India, including refinancing permissions, pooled financing structures, and incentives of Rs 100 crores for large issuances, are expected to deepen the market and potentially lift annual issuance volumes to between Rs 2,500 crores and Rs 3,000 crores through 2034.
Even so, governance standards, repayment capacity, and weak secondary market liquidity remain concerns. Trading volumes in municipal bonds were only around Rs 281 crores in 2024, highlighting the need for stronger transparency and financial discipline among urban local bodies.
In the NBFC space, Mangal Credit and FinCorp raised Rs 10 crores through secured non-convertible debentures offering 11.75% annual interest with monthly payouts over a tenure of 1 year and 9 months, secured by a first-ranking charge on receivables.
Listing those debentures on the Bombay Stock Exchange improves transparency and liquidity, while the company's 1.2 times asset coverage ratio and clean repayment history strengthen investor confidence in the issuance.
Universal Cables is another company in focus. The board will meet on May 23 to approve fiscal year 26 audited results, consider dividends, and evaluate raising up to Rs 150 crores through non-convertible debentures to support growth and manage debt obligations.
Investors will closely monitor whether the company can successfully execute that capital raise while maintaining financial stability amid intense competition from companies like Polycab India and KEI Industries in the infrastructure and power cable sector.
In banking, CRISIL reaffirmed CSB Bank ratings, maintaining the highest short-term rating of CRISIL A1+, while proposed Tier 2 Basel III bonds retained a CRISIL A stable rating, supporting the bank's future capital raising plans.
Strong ratings improve borrowing costs and strengthen market confidence, especially as banks continue expanding retail and MSME lending while managing risks related to asset quality, profitability, and regulatory changes.
The clean energy finance story is also accelerating. Solfin Sustainable Finance raised Rs 280 crores and became profitable in its first full year, aligning closely with India's target of 500 gigawatts of non-fossil fuel capacity by 2030.
Their digital underwriting systems now reduce residential solar loan approvals from weeks to days, while a partner network of more than 1,200 firms is helping expand financing access across Tier 2 and Tier 3 markets.
Another major development comes from Skydo, which secured in-principle approval to operate as a cross-border payment service provider at Gift City, alongside Reserve Bank of India approval for both inbound and outbound payment flows under the Payment Aggregator Cross-Border Framework.
That dual approval allows Indian exporters, startups, freelancers, and MSMEs to access faster and more compliant international payment infrastructure, while enabling Skydo to expand into services like e-money accounts and merchant acquisition.
Private credit activity also remains strong, with developers Kalpataru and Shangri-La together targeting nearly Rs 2,600 crores through structured bond issuances, highlighting how private debt funds are increasingly replacing traditional bank financing in Indian real estate.
At the same time, Credit Saison India raised $500 million or about Rs 4,830 crores through its largest external commercial borrowing, involving lenders including the Asian Development Bank and State Bank of India, supporting expansion in MSME and secured lending.
And finally, the Reserve Bank of India has proposed rules allowing lenders to disable select mobile phone functions after 90 days of payment default on finance devices, while ensuring essential services like emergency calls and internet access remain active. Alongside stricter standards for certified recovery agents, these measures aim to balance lender protections with stronger consumer safeguards,